Thanks, Andrew. It's been a really stimulating, thought-provoking day, and for those of you who don't know, we have Paul Smeaton, Chief Executive of Vero, Chris Black, Chief Executive of FMG, General Manager of NZI, Travis Atkinson, and Kai Dwyer, New Zealand General Manager for Zurich. So welcome, gentlemen. Look, a fairly open starter. We've had a very interesting day. We've heard around disruption, we've heard about regulation, we've heard about emerging risks, and also brand and reputation. Thinking back on the day, what are your observations? What have you come away with in terms of the learnings for the day? And pick it up, whoever wants to take it first. Paul, do you want to have a go first?
I'll kick it off. I think a takeaway for me was the VUCA world we live in. I think it was mentioned by a couple of speakers today. And so you can be scared by that in terms of what does the future look like, or you can embrace it. And I suppose as a CEO leading an organisation, I'd like to embrace it. And I think about, in that VUCA world, how do we create a sustainable and resilient organisation? And when I think of today, obviously, resilience today is around, enhancing our existing products and services, making them more efficient, maintaining our margins, making sure the customer's happy, and then we can extend those to other markets. So I think we understand today how to create resilience, more around resilience tomorrow and how we transition. And for me, that's what I'm thinking a lot about. And Kirsten, she works at Suncorp. I'm part of the Suncorp group. A key takeaway from her session was around, it's very hard to predict what the future is going to be like in 5 to 10 years, so don't. But what you should do is have a portfolio of ideas that you want to test quickly, test with your customers, and work out the ones that you think are plausible, and then if you can, scale quickly. And for me, the key thing that sort of came out for me that wasn't really talked a lot about is that the customer will determine what we do. And there wasn't a lot of mention about the customer. You talked about cars and things like that. But for me, if you stay focused on the customer, the future world will be fine, because you'll design products and services to match their needs. And so whether the motor revenue pool drops, it may or may not, but I'm sure another revenue pool will replace it. And as long as you stay focused on the customer, I think that's the key thing. So key takeaway, or one of the takeaways for me.
Okay, anyone else want to pick that one up?
Yeah, I'd just like to mention also, I think the issue of customer focus hasn't really come up so much, and yet it's so important. And I think it is the key to resilience. If you give customers what it is that they need and the benefits that they're looking for, you will succeed and you will survive and thrive even. So I agree with the sentiment that even though there's a lot of change out there, at the same time, our core, I think this came out really strongly in a couple of presentations. At the core, our operating model is still based on being really good at underwriting, being really good at claim service, it's managing capital and giving your shareholders their returns, and it's having efficiency in your sales and service. So that focusing on those elements of the model won't change the overall value equation in terms of insurance.
Yeah, look, similar from my perspective. I think my takeaway, for those of us that work in the industry and are associated with it, there's probably no more relevant time when the global nature of what's going on is relevant to what we do day to day. So, and if you think about, we're being talked about a lot. So there's a lot of discussion around what's going to happen to this industry that we're all part of. So, I think that global sense and all these factors coming together and what's going to happen in insurance, this question, I agree with both Kai and Paul. Actually, it makes it for a pretty interesting time, because you sense that the next few years is going to be interesting as choices are made, and I think the customer point is really relevant. My view probably is we don't really know how it's going to play out, and I think probably within our company we probably have a view that a little bit like Paul expressed, but you've got to have some bets and create some thinking, certainly bottom up. And Kirsten articulated that well. Around, what is the art of the possible, and then have some bets on some things that may play out. And I think that makes it for a pretty interesting time within our industry.
Yeah, just to add to that, I think it's interesting the amount of capital that's coming into the industry and has done for a while. I think what that does, just in terms of supply and demand, if there's a huge supply of capital, it's looking for a home. And I think that will drive innovation because it's got to go somewhere. And so that's advantageous. I think the industry is actually quite innovative. And I think it's important we continue to be innovative because with that comes that leadership role that was just talked about in the last speaker's presentation. And the leadership role we need to play as an industry around influencing government and regulators particularly around the way the things should pan out, whether it's around cyber risk, whether it's around regulation on level playing field and things like that. The other observation I had today was just with this sheer weight of capital, it's interesting, big balance sheets. So anyone can be, if you're just going to pay checks out all the time, then anyone can be an insurer because it's just about having a big balance sheet. So for me, what's the difference that we offer as an industry? And I think there are two things. One is, firstly, the importance of the risk management and the risk advice up front to help customers set themselves up well in terms of understanding and the losses or understanding the risks and how to manage those. And secondly is actually the claims experience. And that still is a real differentiator for us. So it's not just about paying checks because anybody can do that.
Yeah, just to bounce off that, with this new capital coming in, my view is that if your only value proposition is price, then it is a race to the bottom. And so, to your point, you've got to once again stay focused on the customer. If you've got to provide non-price value to the customer, and if you do that, you retain them, and that's part of the sustainability. It can't just be a price game. So hopefully it will drive innovation, better customer experiences, better products and services, and so forth. So
Yeah, the trigger for me from what you've been saying about the customer is the comment, I think, from Peter Biggs when he was talking about brand and reputation of the industry. And he distinguished the what and the why. And I wonder whether or not, as an industry, we are good at telling the customer or learning from the customer what the why is and how to interpret that in the conversation.
our purpose.
Yeah, our purpose, yeah.
Oh, just on that, at Suncorp we talk about creating a better today, and that's for all of the stakeholders. So for shareholders in terms of returns, for customers in terms of satisfying their, making sure they have financial well-being, for employees, place to work, and so forth. So the why is absolutely critical, being your purpose statement. Yep.
Yeah, well, the same with our organisation. I think we've embraced a strong purpose around making this world a safer place. And when you can. And there's bias in us who have been in the industry a long time, but actually at claim time, I agree with Chris, every single day we make a difference. And you're right, Tim, we haven't always got the credit for that, but that comes through my bias. It will remain a challenge for us though. I think that we know there are headwinds in certain areas around what insurance looks like, and we've talked a lot today about uncertainty and different capital markets and other ways which insurance could be delivered. So it's not going to get any easier. Look, an interesting point. I mean, not to pick on price, but I thought there's a couple of books mentioned today. Actually, there's a great story, Why Humans Matters. It's a book by Jeff Colvin. It talks about, you sort of can get derailed a little bit about what's going to happen with artificial intelligence and blockchain and virtual reality and other things. Actually, the value in empathy and creative thinking and storytelling and relationship building and leadership and creating cultures, the things that humans are inherently very good at doing, aren't going to be replaced in a hurry. And actually a lot of them I think are part of the insurance industry. That's why I've been part of it. Actually a lot of those traits of the relationship, empathy at claim time. I think it's a great place for that within our industry again, and I think that's another way we're going to see the strengths of our people be maintained while other things change.
I'll just go here. We have a question here from Anonymous. So this says, a lot of what we've heard today indicates that the role of brokers will in future be minimal or even non-existent. However, large insurers currently tend to have tight personal and professional relationships with brokers. How will insurers handle this? So three of you here are intermediated. I don't know whether you dodged a bullet there, Chris.
Maybe I'll start.
Yeah.
We don't. We have a different distribution model, but just to give the other guys a chance to think. I think the thing I find interesting in terms of a value chain, you've got to create value in a value chain to make it work. And at the end of the day, you've got to get a return on your capital. So going back, 10 years ago, you needed a double-digit return on capital, whether you're in the reinsurance world or if you're in the insurance world. And now if you look at what's happened with the life industry, a lot of life industry, banks own life insurances and life insurance companies, and they're selling them. They're selling them up to free up capital. And actually a lot of Japanese organisations are buying life companies. The reason for that is in Japan, actually bond rates are negative, so anything positive is good. So they're quite happy to accept a return on equity of 6 or 7%. So if you've got a dynamic in the chain where there are super profits, and a super profit can come about by you getting a big margin and you don't have to put up much capital, two things can happen. One is that's not sustainable as a rule, and so what happens there is different distribution models come about. So unless you have a good balance across the value chain in terms of the amount you put at risk and the amount you expect from that, then it's likely that the model will change. And so you can either see it coming and do something about it, or not, as the case may be. Now that's quite an obscure answer, I know, Tim, but it's given these guys a little chance to think about
Yeah, good stool.
an intermediated approach.
Kai, you want to go?
What he said. No.
Sorry, yeah, please.
Look, I don't think it's for us to necessarily determine the value of what brokers do. That's for customers to determine. And as long as they value the advice and the services that brokers provide, then it will still be the channel they select, and it will still be paid for. I think it is interesting, though, the data we saw, the level of investment, all that capital coming in that was going into, the distribution end, does actually, I think, support Chris's point around where people might be seeing the greatest opportunity with all of that spare money that's floating around and the choice of trying to disturb existing paradigms in the insurance industry. So.
But the key point there is the customer will decide.
Yeah.
And if as an organisation we lose sight of what our customer wants, we will die as a business. Now, I agree with Kai that customers will want, for complex insurance problems, they'll want advice on that. And so I think there is absolutely a future for the brokers. But at the end of the day, the customer will determine that. And for simple, low-cost, mundane commodity products, yes, that'll be direct. And to be honest, the brokers probably aren't interested in that anyway because it's not good use of their time. So.
Oh, look, I mean, I agree. And I think models will converge. I see brokers coming down the value chain as well and using their distribution networks in different ways. Business is getting more complex, and in many areas. And I think quality advice by good brokers will always have a part to play. I don't think there's any doubt. I agree with the other guys.
Tim, just one other comment just to add to that. I think the only free bet one gets is diversification as a rule, and so if you've got different distribution models, if you've got different ownership structures. All that actually creates a much stronger, more vibrant industry. So, I think there's a lot of value in having a lot of different variations.
Thinking about the customer and thinking also in that regulatory space, we've heard a lot about the acronym VUCA today. When you look at the regulators that we have here in New Zealand, are they sufficiently well-resourced? Are they sufficiently agile? Are they going to be able to keep pace with the change and emerging risks that are coming through, when it's a sufficient enough challenge for insurers themselves to keep ahead of the wave? And is there a risk there that if the regulators can't keep pace, that they may even end up stifling innovation at the customer end?
Who wants to go?
Yeah.
Maybe I'll have a go. I think in terms of the regulation here today, I mean, it was talked about there's a lighter touch here in New Zealand. I think actually that puts New Zealand in a good spot in the sense of as it wants to improve its effectiveness, it can look to other jurisdictions and pick the eyes out of best practice. And we've got a few examples of that today around what Australia's doing well and the like. So I think the New Zealand regular's in a good place for that, and these various reviews, hopefully that'll come to fruition. I think in terms of the pace of change, your point, I think we have a role in an industry to help inform them. And that's where the ICNZ comes into play. And so when we see things that are happening in the market and the industry, we need to work with the regulators to help educate them in terms of what it means for the industry and go from there. And then obviously they help inform government around potentially specific legislative changes. So but there's a role we have to play there, definitely. Thought leadership.
Yeah, I think with respect to the regulator, sometimes you have to be careful what you wish for, but there's definitely a significant difference between here and Australia, very significant in terms of the demands of the regulator to scrutinise your business and so on. My personal feeling is that at times you wish the regulator showed a greater level of sophistication in their understanding of our business, but that doesn't necessarily mean that I would want them to be increasingly heavy-handed in terms of how they impose themselves upon everyday business activity. So it's quite a delicate balance, I think, getting that right.
Okay, moving here, George Attard earlier on today questioned whether current disruption is just optimising rather than helping grow the market. And Chris here asks, any comments from the panel about that? So this is optimising, that simplification, the price point, but not growing the market in terms of disruption. Any comments on that?
Yeah, so I've seen a couple of examples over the years where I find this discussion around are insurers innovative quite interesting, because it's often talked about, and I tend to lean also towards saying I think that we are innovative, but we are more so incrementally rather than we transform the world in a big bang sort of fashion. But I've seen a couple of examples, and even cyber insurance, which has been talked about so much today, as well as supply chain insurance, which was mentioned by Inga, and it's an area that we do a lot of work in as well. These are areas which are immensely complex, emerging risks, where there's a lot of demand and talk about we need solutions to this. But what we find is that new solutions are created, a lot of capital is put up to actually support the launch of these new products, but the take-up's poor. So on the one hand, there's a lot of rhetoric around we want innovation, we want new products, but it's not always matched with an appetite to spend the money on the new solutions that actually protect against those risks.
Is that a communication challenge as much as anything else, or lack of understanding, or what?
Well, I think there's a definite lack of understanding. I think, in some respects, there's a lack of appreciation of the risk, and that's our role, I think, to educate, because business is changing, and I think new risks are emerging, no doubt. Look, I suppose my view generally is what's the speed of change here, and where are you on the curve? Lots of catch-up going on in the globally, I think, in insurance in terms of simplification and so on, and that's needed. But again, I think there's that positioning for a move one way or another. I don't know if we're seeing a lot of significant step change. What Kai's talked about, I think, is responding to here and now. I mean, I think our view, again, is what I sort of alluded to earlier, is you've got to listen to customers, you've got to actually provide them with that cover they need today, and foresee as much of the future. But it's hard to predict exactly how some of these things are going to turn out.
Yeah, difficult to add anything more than that.
Okay.
I agree.
So here we go. Question from Craig. George talked earlier about the gaps between what business leaders saw as their business risks versus the insurance products being available. This is clearly an opportunity for the industry, but also a challenge. How do we collectively tackle this issue to the benefit of the industry and the business society at large? So it's a sort of a little bit of a flow on from what you've just been talking about, but I think it's another dimension to it.
Well, part of them, just to add to probably what's been said, I mean, I think increasingly within this business world, we are certainly becoming more liability-led as opposed to asset-led. And it's sort of like, it's a little bit not pushing at the fundamentals of a liability underwriter versus a property underwriter versus marine underwriter, but actually, you know, ultimately, the risk to business is increasingly becoming from liabilities. I mean, our own research sort of says that same thing. Loss of connectivity is now sort of number one and taking over from fire and so forth. So I think that is, does require, you know, a change in thinking around how we look at business and that's just, again, our role, you know, to lead in that sense. And I think Scott gave a good view within the Munich Re prediction that in the future, you know, the teams of actuaries will be modelling cat exposure from cyber in the same way as they're done for property for all these years. And I think there's something in that, you know.
No other comments on that one? Okay. Diversity, resilience, and managing what we need to do with the future challenges. When you consider future recruitment, what skill sets do you see that we need to aim for to be different from the skill sets targeted in new employees in the next 2 to 5 years?
Well, I've been highlighting a lot today or in this session around being customer oriented. So all of the admin, non-value add tasks, they're either going to be automated or outsourced or whatever. So for me, when you look at the future workforce, it's around a workforce that can think, the customer is agile in their thinking, open-minded. We talked a lot about mindset today, so being able to actually continually improve, happy to adopt change, customer-focused, customer-orientated is the sort of the capability I think we need to put in place.
Yeah, I agree. I think your point, Travis, before about the more human skills that you mentioned, that book that you were talking about, I forgot the title, excuse me. But I think that those skills will always be valuable. I think there are certain things, decision-making processes in our business that are not binary and not linear, and so I can't envisage them so easily being modelled. And I think those skill sets will always be important. And at the end of the day, we're still a trust business.
Yeah, well, I think the core of diversity probably doesn't, you know, our customers increasingly don't look, with respect to my panel members, aren't going to all look like us. And so, you know, I think having a diverse level of, you know, thinking in any organisation that is customer focused is going to be critical. So I think we have some fundamental challenges today, you know, about getting a representation of our customer bases within our organisation, certainly within our organisation. And that's something that we're taking very seriously, because ultimately we've got to be lined up with our customers and understand what they're thinking. And, you know, all the experience that comes from being in the industry a long time, I think is relevant some parts of the future, but actually the future customer needs, again, coming from different areas, you know, you need to be having a more diverse workforce. So that's certainly a priority for us.
And I agree with her. I think the things around, you know, customer centricity, around change, around communication, they're critical skills. But I think also the ability to listen in a fast-moving world. You know, and particularly to one of our speakers said he's a strong advocate of, and always has held minority views. And if you're moving quickly, one's really got to have an antennae up to listen to that. And so I think that's a really important thing, otherwise you miss things.
One of the debates we've been having within the Insurance Council over the last 12 months is membership composition. And one of the dimensions to that is when you look at life and you look at health and you look at general and you look at the traditional segregation that we've had for decades, hundreds of years in that territory. Well, perhaps not hundreds, but decades. The question is with these changes that we see ahead, do you see that those, you know, the capabilities around data analytics, big data, and all of that, changing that model?
Yeah.
So, Paul, you're a CE of a composite.
I can see customer solutions coming together. So rather than we talk about, you know, physically insuring the asset, car, home, whatever, what I can see happening is moving towards coming up with solutions for customers' life stage. and that would include health, life, the physical, the intangibles. So I see potentially customer solutions coming together to provide a better solution for overall, not just by product line. Does that make sense?
Yeah, absolutely.
I think a link to that, it's interesting as to how broad one makes it. You know, one can have just a straight blanket cover and you're not really sure what you're insuring. And so, you know, at the end of the day, one needs to understand and be able to price the risk. So that tends to encourage us to split things up rather than aggregate things together. But it does tend to ebb and flow over time in cycles. And I think the other interesting thing about looking at those insurance sectors, if you like, is looking at adjacent industries for different ideas. So I was listening yesterday, or on Sunday I think it was, that is yesterday actually, to the FIFA football, it's called Football Manager as a game, you know, a console game, where you've got millions of players, and now they're so sophisticated. Actually, the managers of the actual football teams are looking at the skills and techniques of these game shows to train their own teams to get out on the field. It's quite extraordinary. And these companies are owned by FIFA and others. So I think looking at adjacent industries is equally important. Actually.
Mm-hmm. Maybe we should give the Phoenix some instructions.
Any other comments on that sort of life and health?
Yeah, look, I think I agree with Paul. I think if you look at it from a customer perspective and customer focus, I don't think that there's that much differentiation in the eyes of most consumers. It's structural differences within the industry that's probably kept us more apart. And as technology and regulation and those rules that exist in those structures get broken down, I think there's a degree of convergence that will happen. It's always struck me that one of the most important differences, though, has been in the advice model of the general versus the life sector, and that's the area where I think there's probably still needs to be quite a bit more work in terms of how we reward and compensate for sales and looking after customers and that sort of thing.
Sort of broadening the offer than purely just...
yeah, I think it's product focused, it's not customer focused at all.
We talk at Suncorp around creating connected customers, and so the definition of a connected customer, if you think about the needs, financial needs, you've got mobility, you've got your place at home, you've got yourself, and you've got money needs. They're the basic needs. So if you can create a connected customer, so 2 or more needs is what we call a connected customer, they stay with you a lot longer. You're suddenly creating non-price value. And if you can provide them with solutions that cover those needs from one place, they will stay with you, not necessarily, they will always look at price, but not necessarily the main driver. And I think that's where slowly the industry is going to be moving towards.
I've got a question here from Jackie, which challenges us a little bit here, and it says, do you think the industry is truly listening to customers and meeting their specific needs rather than offering the most appropriate available offering? Are we being agile enough with our products? What should we do better in this regard?
Maybe, Tim, if I could just kick off on that. I think one of the biggest challenges we have as a business or an industry is complexity. And complexity has killed a lot of businesses and a lot of industries. So I think, it's important to make choices about what you're doing and what you're not doing. And product proliferation is a really difficult thing to manage, particularly if you're trying to take products off at the later end of the life cycle. So one can have a proliferation of products, but that sometimes has risk with it as well. So it's about trying to find the sweet spot, I suppose, in terms of the overall portfolio, I would think.
Well, look, I mean, that's a good question. I think we've got a long way to go. I mean, a truly customer-centric organisation, some of the global examples, some of the examples that were raised today, I mean, they don't have any financial measures. They have advocacy measures. The customer advocacy is measured at every point. I don't think, as a rule, on a generalisation, that we're at the point where there's a step change to that sort of degree. But actually, ultimately, that's probably where you've got to go, and that's how brave one's going to be. Look, we've started the program recently of a bottom-up program of getting all our leaders to actually start to listen to calls throughout the whole organisation. So, this is pretty basic stuff, which is just stepping back and actually listening to calls, and then we've been, ringing out customers that have given feedback. We started the program in Australia, we brought it to New Zealand, and it doesn't matter what part of the organisation you're in, whether you're frontline sales or whether you've previously done this, and it's early days, but actually that's the sort of step change to sort of say you've got to go out and talk to customers, both that have been advocates and detractors. And that's the sort of thing that starts to get people thinking about, actually, regardless of what part of the organisation I'm in, it's about the customer. Now, it's a long bow to think that then that means a complete shift towards what customers want and then delivering it, because that's hard to do.
Yeah, I think another perspective is it's fairly generic as a question, but when you get down to specific behaviours in different segments, if you're at the larger commercial end, you've got fairly sophisticated risk managers who can define what they want, and they work with fairly sophisticated brokers who can tailor-make a bespoke offering. So I think it varies a little bit where in the market you're talking about that question. But generally, I think there's probably some truth to that we maybe aren't as responsive at bringing out simple products to I guess retail customers as much as we might as an industry.
I mentioned it before, you talk about a company, we spend a lot of money and resources in enhancing existing products and maybe extending them to other market segments. We spend a lot of time there, so make hay in that area. And then when you get to the renew, which is, okay, what are these new customer needs? We probably invest 2%, if that. So I think we need to invest more, but that takes courage. And that's where I think we've got to transition as business as leaders. We need to start investing in that renew, understanding this transition, making some calls. But I think to Travis's point, you might, in terms of the renew, have a portfolio of bets or portfolio of ideas that you test and learn very quickly with your customer base. And when you see one that works, scale it very quickly. And the example that we've recently used at Suncorp is the Trove. So I don't know if many people are familiar with Trove, that short duration single insurance. So for example, you've got on your iPhone, you're about to go skiing, you swipe your iPhone, I'm going to insure my skis while I go skiing for the next 3 hours. Now that takes some bravery in terms of underwriting. In the middle, everyone goes fraud and stuff like that. But unless you start, that's what the customers ask for, unless you start making the transition and testing and learning from that, you'll never get there. And I think this is where the industry, we need to invest more in renewing our business models than staying on the enhance and extend part of our business.
Still staying with the customer, one of the things that irks me is that we deliver on the promise. We pay, something like 95% of claims, and yet the urban myth is still there that says the insurer is always looking at the fine print. Why is it that we've got that, complete mismatch of actually we do the job, but these myths still exist and they're still alive and well?
Yeah, it's a great
I
question.
think it's exactly that. It's myth versus fact.
Yeah, but I guess even a percentage of the 95 will be experiences of people who said, yeah, but they didn't pay it all, they adjusted it down. And so it's almost, look, I've always totally believed that we shouldn't pat ourselves on the back just because we pay a claim, because that's what we're there for. But I think this gets down to financial literacy, education, explaining the product. And we obviously let ourselves down, I think, to be honest, if we're harsh on ourselves.
Yeah, look, I think I agree, and it's certainly at claim time, when it's the truth. But I think we're just not great storytellers, personally. I think that the role that insurance plays in business is integral. We sort of know that. I mean, and really, business insurance only exists to actually allow business to function, really. And so, risk in business, no risk. The more risk, the more insurance. Businesses take risk, and we cover it. So I don't think we tell that story very well. And as putting the claims aside for a moment, I think we've just got to have a louder voice around critical role that we play, and not relent on the fact that actually NZ business or any business globally could not exist without us being there and putting our capital behind it.
Chris, your company talks about advice and insurance. So is some of the answer lying there in that advisory role, that educational role?
Yeah, it is,
How
I
do you
think.
play it out in FMG?
One of the cool things about our industry is that it's real. You know, it's real people, real businesses doing real things. And, you know, that old adage that insurance is the glue that keeps, you know, society and business and the economy together is absolutely right. I was just reflecting on the Canterbury earthquake, for example. So there were 700,000 claims in the Canterbury earthquake. And you wouldn't have heard the good stories, you would have only heard the bad stories. So and that's a dynamic as a society. You know, do we all have an appetite just for the bad stories, you know, for the rogue trader? You know, a good story is not worthwhile these days. So, you know, I think that's a challenging question for us all. I was reading, Tim did send us a couple of ideas last night for questions today, and I was looking at the Lemonade website and what the guys said when they launched Lemonade. And the first thing they said was 40% of claims in the US are fraudulent. The other thing is most insurers don't pay claims, and they hate paying claims. Now, so I think part of it is, you know, us as an industry being proud of what we're doing and the important role we play around paying claims or anything else. So I think there's a range of things in there, probably.
The last presenter, Ian, were talking about cyber risks. We're in a world where business transactions ubiquitously are going to be online in a very interconnected world. And the message I was getting there is that we're not going to be able to rely on the state necessarily to be able to get intergovernmental agreements to sort this out. And we are very much operating in a Wild West environment. I think Ian referred to retaliation. He referred to other things that probably would stretch the boundaries for where insurers would feel comfortable. But how do we respond to that kind of challenge? Because we're going to be underwriting business risk, underwriting the growth, the exponential growth that's going to come through through online, and yet it looks like a very, very uncertain environment.
Yeah, that's a tricky one. I remember in 2003, I was working for one of the big Australian banks, and we had a cyber attack. There was a Russian guys got hold of our domain name. It was about 9 o'clock at night, and to be honest, it was one of the scariest things I've ever had to confront. I must admit, and you know, for those that know the Australian banks, they have really powerful horsepower in terms of systems and processes, and they couldn't figure it out. The Telstra guys couldn't figure it out. You know, we had a range of people trying to figure it out. But it took about 36 hours for someone in the States to help us to figure that out. And that was in 2003. And I do remember just the feeling of complete helplessness, because actually you just couldn't do anything about it. So I think it's an interesting challenge. And as the world moves quickly, and you know, as a business, you've got to define what you want to have a core competency in, and what you need to rely on others for. And I think that's a really important decision in this area. You know, who do you rely on, and for what, in terms of whether it's cyber risk or whether it's, you know, anything else for that matter. You know, around core systems even. Yeah.
Yes, it's interesting because we've been, as an industry now, the industry has been selling things online already for the better part of a generation, I guess, 15, 16 years, you know, to a greater or lesser degree. So to some extent, it's kind of what's the problem, because we've been doing it already. But at the same time, I did agree with some of the comments around, I think basically morals and ethics on the internet seem to be based on a completely different value system to what we see in the real world, and so that creates risk. But what I find concerning is I don't feel that I'm skilled enough to actually understand the nature and the extent of the risk and get my arms around it. I feel you have to depend so much on, if I can call them techies, who trust us, we've got it all under control. It's a bit like Scotty on the Enterprise. That's one of the things that gives me concern, is not feeling ever that I can actually fully understand it, which is probably what you're referring to.
That's how everyone would feel.
Yeah.
It was a bit like year 2000, where it was such a simple thing and just a date field, and not quite sure what happened there, but it seemed to work.
Well, on that note of uncertainty, which is very appropriate for people that deal in risk, and since the water hasn't been touched and there's a drinks session after this, I think we should probably call it a day there. I'd like to thank the panel for coming up and answering the questions, and I think we've got some bottles of wine for you here as well. So just one moment.
Booze seems to be a theme in the insurance industry.
Alrighty, pass them along. So
Thanks, Steve.
here you go, Paul. Thanks very much.
Thank you very much.
Cheers, guys.